you have a practice or are you running a business? Valuation is the ultimate KPI.
Hey there, welcome to another episode of the Modern Financial Advisor podcast, brought to you by Truelytics, the only comprehensive advisor transition management platform for the wealth management industry. My name is Mike Langford and I'm the host of the show. And this week you are in for a very special treat as I have three guests on the show, and we're going to be going deep and wide on the concept of benchmarks and measurement for RIAs and independent advisory firms. My panelists, if you will, for this exploration of benchmarking include Catherine Williams, the Vice President and Head of Practice Management for Dimensional Fund Advisors, DFA for short. DFA is one of the world's largest asset management firms with over $450 billion in assets under management. And while that's certainly impressive, it's huge, frankly, what you'll hear a lot from Catherine in this podcast, in this conversation, is that DFA brings a lot more than just asset management to the table for the advisors that they work with, right? Their goal is to help advisors grow thriving businesses by using best-in-class practices that are supported by data. Great topic for today's conversation. Also on the show is Tom Orecchio, the CEO of Modera Wealth Management. Modera is a large RIA headquartered in Westwood, New Jersey, with offices in Boston, Charlotte, Atlanta, and Inverness, Florida. And if you're curious where Inverness, Florida is, it's just north of Tampa, a little bit there. So Tom will share how he and the Modera team translate benchmark data and analysis into real-world action to grow their business and better serve their clients' needs. So think of Tom as bringing the, hey, here's where the rubber meets the road when it comes to this benchmarking stuff in the conversation. And then finally, Terry Mullen, CEO of Truelytics, returns to the show to join the conversation and help us explore the future of benchmarking for the industry and the exciting possibilities for real-time data that are just around the corner. So really exciting stuff. As always, please do like and subscribe to the podcast on your favorite platform. You can find the Modern Financial Advisor podcast on Apple Podcasts, Spotify, Google Play, SoundCloud, Stitcher, wherever you like to get your podcast jam on. And be sure to share it with your colleagues and friends via social. If you have a question or for myself or any of the guests or a topic you want to make sure we cover in the future, you can swing on by Truelytics.com and find the show notes for this episode in the Modern Financial Advisor section, or you can just shoot us an email at podcast@Truelytics.com. And now, the moment you've been waiting for, a robust conversation on benchmarking for RIAs and independent advisory firms with Catherine Williams, Tom Orecchio, and Terry Mullen. Let's get to it. Hi, everyone. I'm really happy that you were able to carve out the time out of your busy work from home lifestyle that we're all experiencing right now to have this conversation on RIA benchmarking and what we see for now and the future of that concept. So thank you for joining us. So I think the first way to kick things off is kind of talk about why we're actually doing a podcast, kind of a panel-like discussion here for everybody. But before we do, why don't we kind of go around the horn and introduce each other? So let's let Terry, why don't you introduce yourself?
Great. Thanks, Mike. Terry Mullen, founder and CEO of Truelytics. And we work with RIAs around business intelligence and valuations, et cetera. And one of the outputs of the data of our software is the data. And the data is only good if you can look at it in a bunch of different ways, which really leads to, I think, the discussion that we're going to have today, which is benchmarking and its importance.
Great. And how about yourself, Catherine? It'd be great to hear from you as well. Introduce yourself.
Hi, it's great to be here today. Catherine Williams, VP, Vice President, and Head of Practice Management for Dimensional Fund Advisors. And certainly the idea, the concepts around benchmarking are near and dear to us as we head into what is the 10th year of our U.S. study this year. So looking forward to our conversation today.
That's great. Welcome. And Tom, yourself, introduce yourself.
Hi, Mike, Catherine, and Terry. My name is Tom Arecchio. I'm the CEO of Modera Wealth Management, and we are big believers in the concept of benchmarking and using the great data that comes out of it to help us run our business.
Awesome. So I think with this crowd, we're going to have a fantastic conversation. So first to you, Terry. Obviously, the name Truelytics. Anytime you hear the lytics in a name, it brings to mind the concept of data and analysis. Why is benchmarking and quantitative analysis so important to the industry at this moment in time?
Well, whether it's just at this moment in time, clearly, I think anytime it's important to business owners. And I think it's something that has, quite frankly, been lacking for a lot of business owners. Tom, I know that you could probably talk about it. I know that you measure it a lot, but so many firms don't measure it. And it's really hard to manage what you can't measure. Obviously, that's a term we've heard a bunch. And I think that the ability that you have to run a successful business, to understand what you're dealing with, is critical. And in our industry, it's even more critical because there are so many disparate types of firms. There are firms that are a couple $1 billion in assets under management, and there are firms that are, approaching 100 million or less, and anywhere in between. And it's really difficult to try to compare yourself if you're running a shop like Tom's to someone that has a firm that's a tenth or a 20th of the size, and understanding the important levers that you can pull. So I think data is absolutely critical. I think the benchmarking studies are really important, but they're only a piece of it. And I think that our industry has not done a good job. Not in, I mean, I think we've done a great job of giving them some of the information. I'm not sure that everybody's actually used the data and information that we offer them. But I think in any business it's critical, and in this business it is uh, even more so.
Yeah, I agree. Uh, Catherine, you and I were talking in terms of prep for this podcast, and you actually teed it up a little bit in your introduction that Dimensional Fund Advisors is releasing a new comprehensive benchmarking report. And in fact, it may be available at the time people are listening to this for them to download and digest. Why does DFA feel so strongly about benchmarking, and how are you hoping it helps RIAs?
Well, certainly, first and foremost, for us, and you think about the really the DNA of Dimensional, it really is about this idea of gathering really great data, applying rigorous analysis to that data, and then making informed decisions. And so 10 years ago, when David Booth came to us and said, hey, I think it would be interesting to better understand, to help advisors understand not only more about what's going on in their own business beyond just the investments, but also how that looks against their immediate peers, the industry at large. Do you think we could do something like that? And so here we are, as I mentioned, 10 years later, where we are a global study. We subsequently launched in Europe and Australia as well. And it really does come down to this idea of, you, as Terry was saying, you have to measure. You don't know what you don't measure. And so secondly, for us, the study and the information we gather, the conversations we have with advisors, absolutely helps inform then where we develop resources to allow advisors to take the information and take action around it, which I know we're going to talk about in a little bit. It's so important. We can push data all day long, especially after 10 years, right? We have a large number of firms that have participated in the study every year. It's really about creating a call to action around that information that drives us at the end of the day.
Yeah, yeah, and I guess speaking of where the data and the benchmarking analysis gets put into action. Tom, you and your team at Modera Wealth are where the rubber meets the road with this concept of benchmarking. Has benchmarking always been important for you in the firm, or is this something that's kind of a new strategic focus for you and the team?
It's always been important to us. People who are in this business, advisors, came into the business primarily because they wanted to work with individuals, and because they're analytical folks, they're good with numbers. Many of them didn't realize that one day they would be small business owners trying to manage an enterprise. And the benchmarking data makes it a lot easier for us to run our businesses, to make some of those strategic decisions that we need to make, like when to hire people, when to grow the business, the staff, when to take on more space, and when to improve or increase the services that you offer. A lot of the data that comes out of these studies helps us to make those strategic decisions. And again, I know it's a people business, but because we tend to be analytical, we rely on these numbers to help us make these important decisions.
Yeah, that's really smart. So let's talk about translating into action, right? So, the reason why we benchmark and kind of, as you mentioned, or measure things in business and in life is to assess the kind of not only our current state of where we are, but our progress towards the achievement of specific goals and see how our performance stacks up against our competitors in our peer group. And I thought that was really astute that Terry brought that up, that you really want to be benchmarking against kind of your peers, not necessarily against businesses that are orders of magnitude larger or smaller than you. Uh, in your experience, what are some of the most effective ways to translate benchmark data and analysis like that what's found in the Truelytics True Performance Report or the DFA benchmarking report into actionable steps that a firm can take to improve their business? Let's start with you, Catherine. Given your kind of wide angle vantage point, uh, how have you seen RIAs improve over the years by using benchmarks to guide their efforts?
It's a great question, and I would say really there's three primary ways that I would answer, because it does start very much as both Tom and Terry have touched on, about where you are in your business at any given moment in time, and whether it's the size of your business, the complexity, the number of people you have. And so when we think about our study in that wide angle, it really does allow for firms of all different shapes and sizes. And so the result of that has really shown up in three primary ways. First, I would say it absolutely reinforces the things that you're doing really well and you should continue to do, right? It's kind of that health check. And I often say to advisors, of course, we love for you to take our study, but do some sort of benchmarking. It is so critical to know not only where you might want to change or do something differently, but equally important to really think about the things you're doing well that you need to continue to do. Secondly, we've absolutely seen where the benchmark information can help advisors spot potential issues as they continue to grow. What might they look out for? I'm thinking specifically of a firm that I recently worked with that has really been on an accelerated path of growth for the last couple of years. And so to a certain degree, they're almost having to reverse engineer a lot of the operational technology systems and processes that if you were growing at a more steady pace, you might have tackled along the way. That can be a lot. And certainly as you continue to try and maintain that pace of growth. And so our ability to sit down, look at the data, examine what top quartile firms are doing in terms of their operations, in terms of their technology and systems and processes, helped inform the strategy for them around where they need to tackle first, what's going to be most critical. And then the third way that I think that this absolutely shows up and works and helps advisors is this idea of it's a third party data source. And so even if we've seen where the ability to bring to the table multi-year data around a particular topic or initiative and help, for example, maybe a leadership team or a management team that may not be in complete alignment about what the strategic focus or vision of the firm should be, that data can act as sort of a neutralizer, right? If you believe in the quality and the integrity of the data, it is what it is, right? And so as you think about what your own strategy might be, how do you prioritize that? We've seen where the information can really help bring entire organizations into alignment about what they need to focus on first and foremost.
That's amazing. So, Tom, you're on the boots on the ground level here. How do you and the Modera leadership team approach translating benchmark data into action plans for the future of the firm?
So we use it in a number of ways. The easiest example I can give you is our bonus at the end of the year for staff is in part based on certain metrics that we keep and that we compare to the best performing firms in the industry. And when we hit certain targets, it improves the efficiency and the effectiveness of our firm and our people. And our bonuses are based on hitting those metrics. That's one example. Another example is we have 5 different locations at our firm up and down the East Coast, and we do not keep separate P&Ls for each of the locations. We are one company, one organization, one culture. But in order to better understand the performance of each of these locations and our teams, we use metrics to measure the efficiency of our teams and to see when it's necessary to hire additional people at each of our locations so that we can better serve our clients at each of those locations. So those are just 2 examples of how the metrics and ratios that come out of all the benchmarking are so important to the way we run our business.
That's great. Um, so Terry, obviously, many of the firms that come to Truelytics, they come with a few specific action items in mind as it relates to benchmarking and so forth. Namely, they're interested in succession planning or M&A. So they're looking for benchmarks and analysis like valuation and how they stack up in their peer group. But the benchmarks that your True Performance Report includes can provide insight into several other areas. How else are you seeing RIAs use the data to take action?
Clearly, one area is M&A, and Tom, I know you uses it for that, where you can very easily and quickly look at a firm and see the similarities, where you stack up, opportunities for synergies, improvement, et cetera. Clearly, valuation, that's an easy one. But it's looking at things that are more minute. How much are you spending per client or per household, or what's the revenue per household? Some of the things that they're probably doing. How much does it cost to acquire a customer? I actually asked a room of advisory firms, that question, and if they measured it, and not one person in the room measured the cost that they acquire a customer. As a now a technology guy, CAC is a huge metric that it's one of the biggest metrics that we look at, and in a room of advisors, they didn't even know what the term was. And then they said, well, you can't really measure it. Well, of course you can. How much do you spend on new client activities? How many hours do your people spend and giving out, complimentary reports, et cetera, blah, blah, blah. Take all that added up, multiply it by the average amount of from an hourly perspective, and divide it by the number of new clients you got over that period, and you'll come up with a number. And is that a good number or a bad number? I think there's so many different ways that you can utilize the data and the information, leveraging firms like Dimensional that have that. There are a couple of other firms that do the reports, but unless you do it and look at it and understand, that, then it doesn't help you. And the last thing I'll mention is the ability that I know we will have for predicting winners and losers in this space, because there are absolutely things that we know that winning firms do from a metrics perspective, that and it will indicate whether there'll be a winner or a loser, and it's I think really critical for people to do that. And Tom has talked about the fact that a lot of people, I think his firm in particular, haven't used it. They didn't sign up to become entrepreneurs necessarily when they first got in this business, and the ones that have really been successful very quickly transitioned to understanding they had to be not only entrepreneurs but business owners, and all the things that it entails.
Terry, to your point, we absolutely see as well in our work with advisors that there are some strong characteristics, if you will, of firms that are top quartile, high revenue growth firms. And of course, growth can mean something different from one firm to the next, but that they're on a path of growth, if you will. And some of those characteristics include they've taken the time to get their house in order. If they're going from an operational standpoint, if they're going to pursue M&A, for example, they've developed a very specific strategy around that. We do see some of those recurring characteristics as well too. So your point is an excellent one, and it serves all of the other metrics and profitability, some of those things as well. But the underlying behavior and characteristics is pretty common.
So, in each one of your kind of comments on the previous general putting this into action, one of the things I heard is that it's just look, it's not just data, it's not just benchmarking. You have to use it to analyze your existing business and to think about how to move that business forward, and achieve the goals you have set out for the business. Uh, One of the I thought a fun topic for us to cover would be what benchmarks offer the best bang for an RIA or an advisor's buck right now. Because I've been championing this idea that now is the time to pounce for RIAs and advisors that are looking to grow. Because when the market's in a down cycle and uncertainty causes many of your competitors to freeze and get concerned about just staying in business, it's the high performing firms and individual advisors that make their move. So I thought it'd be kind of fun to kind of go with each of you and maybe ask a few thoughts on a couple of areas. Now, number one, and we'll start with you, Catherine, since you were just in the hot seat there, if you will. Uh, what's a weakness to improve that you see benchmarking can help for an RIA, right? So, what kind of data can they use to spot a weakness and focus on improving that weakness now?
One that we see and look at quite closely with the advisors we work with, that those that participate in benchmark, is this idea of multi-channel growth. When we look at the faster growing firms in our study, they are absolutely pulling through multiple channels. So they're not just relying on client referrals, which for most organizations is the number one channel of growth, but they've absolutely dialed up their efforts around developing centers of influence, their digital landscape, they're conducting events, and of course in the top quartile firms as well, we see M&A activity. And it shows up. These top quartile firms in our study have an average growth across these channels coming in around 10 to 15% versus around 2 to 4% for the slower growing firms. So it's absolutely hitting across multiple channels is one that we very clearly look at, particularly when a firm sits down with us and says, hey, you know what, we want to grow. We're not really sure why we're not or what to do. What actions can we take? That's one of the first things we look at. Where is your current new business coming from? And is there an opportunity to expand the different channels with which you're pursuing growth? That's definitely one that we take a look at.
That's a really smart one because and I've heard that exact same thing over the years. I can't even tell you the number of times that we get all our business from referrals, and it's like, well, what are you doing to incentivize those referrals? And what happens if, for some reason, you go through a dry spell of referrals? Because that must happen. Where's the business coming from? So I thought that's a really smart one to look at.
And it's why this year, for our study this year, we didn't want to just gather that data. We didn't want to just ask, where did you get new clients from? But particularly for those top quartile firms, what were some of the underlying decisions and the impact on the business? If you're growing through your digital landscape, what does that look like for you? How effective has it been? What's the impact that it's actually having on your organization? So peeling back those layers, if you will, to get to some of those behavioral decision making components alongside that data really enriches those conversations.
So Tom, kind of building on what Catherine was talking about, are there any particular weaknesses that you've been able to spot through benchmarking data that you've been able to improve? And obviously, you don't want to give away the secret sauce there. You're a growing business, and we, who knows who's listening, right? But what are some things that maybe you've spotted over the years that you've been able to improve?
In our own firm, we've been able to spot productivity issues. The benchmarks do a great job of highlighting how productive or non-productive your staff is. So we measure things like revenue per employee, revenue per professional, revenue per client, expenses per those same things, profits per those same ones, and even number of clients per those, to get a good idea of how efficient we're being and if we have capacity and what our productivity looks like compared to some of the best firms in the industry. We also use that same data as a litmus test or for a quick assessment of the health of a business we may be looking at to merge with. It gives us a thumbnail sketch of, is this company being productive and efficient with their resources, or are they hitting a wall in their growth?
Smart. So coming to you, Terry, the Truelytics True Performance Report has like 50 KPIs on it. What do you think are some of the ones that would highlight a weakness that a firm should look to improve?
Some of the ones that Tom just mentioned, revenue per client, et cetera. Clearly expenses. The vast majority of these folks started somewhere else, typically an employee at a wirehouse or at a insurance company or something, and if they can't get their expense ratio below where they could have, without a lot of headaches, done it somewhere else. Clearly, making sure that their expense ratio, and again, we're talking about firms, RIAs that are set up businesses. There are a lot of folks that are one and two man shops that may not be looking at all their expenses. I actually was with a gentleman who had more than $1 million of revenue and literally didn't even have a P&L, and that's just, it's mind numbing to me. But that's not going to say I'm not going to say it's the rule, but it's probably not just an exception either.
No, I think that's very common in the industry. As you mentioned, a lot of folks get their start as maybe many of them got their start when they were called stockbrokers back in the day, right? They sat down and started dialing for dollars and to bring on business, just like you see in the movies, effectively. And they built up a good book of business, and they kind of always kind of operated that way and really haven't thought about it as business. Now, on the flip side of that. Let's talk about strengths to leverage, right, Terry? I mean, obviously, there's areas where you can look at your list of KPIs and find out that you're really strong when you look at that compared to peers, right? You benchmark yourself against some peers. What are some strengths that maybe folks might notice and go, "Hey, I should pour some gas on that fire"?
Yeah, the one I would say that again, I can't speak for everybody because this is dependent on the size of the firm and their capabilities. But way too many advisory firms are trying to insource their investment management and investment disciplines, and most of them are really good at client facing things and not a skill set to do the investment management. It takes a lot of time. It's a huge drag on their ability to grow. And there are professionals that can do it. I mean, obviously, it's easy for me to point to Catherine. That's what DFA Dimensional does incredibly well, and others. But I think that's one of the areas that if a firm is doing that, if they're thinking about doing it, I think that the data would then tell you at what point would that make sense in terms of the size and the capabilities of your business to even consider doing that.
That's a really smart point. Tom, you mentioned, that it being a relationship business here, but there is definitely an element to like, relationships are really important, but on the investment process perspective, if you think about it as a business, you're looking for a repeatable process, right? Uh, what kind of strengths do you look to leverage when you look at, across the board at benchmarks? Are you seeing data that says, "Hey, we're really, really good at this. Uh, let's do more of that"?
Well, one of the areas where we're really applying the metrics now is in our business development work. We have a pretty high close rate, and we are pouring gas on that close rate. We just need more opportunities. So I think Catherine mentioned earlier about multi-channels for growth, and we're now pouring a lot of resources into new channels that we are experimenting with because we know that if we're in front of more prospective clients with our close rate, we should be able to translate that into additional new business for the firm. So that's been our focus of late. And we think coming out of a crisis like we're coming out of now, we'll see a lot of money in motion and get more bites at the apple. If we apply our data well, we'll know where best to apply our resources.
That's smart. That's really smart. So, Catherine, again, coming back to that your wide angle view, you see the industry as a whole. Are there certain like strengths that when you're looking at it, like, oh wow, here's a segment or a stat that really tells me companies are operating from a position of strength and they should invest in that area or over invest in that area?
Absolutely. And as I'm sitting here, you even listening to as Tom's talking about that that focus, that pivot toward growth, particularly on what hopefully might be somewhat on the little other side of the current environment that we're operating in. I'm thinking about the conversations I've been having with advisors over these last few weeks, and that is a top area of conversation. And then, really, right alongside that is what I will talk about for a few minutes, which is the employee experience and what's going on with the teams and employees. And when we look at studies and our study and look at the firms in our study, we see a few key characteristics. Tom touched on one, that full-time the revenue per full-time employee metric, which can help firms think about capacity, can help them think about even profitability. We're absolutely looking at those, and those firms that are operating in a certain range with that number, we see them coming really very much operating from a place of strength. But relative to their employees right now, I mean, obviously we've had this terrific. There's been an evolution, if you will, over the last few couple of months around how businesses are operating, how their teams are functioning. And when we look at our study, we're pleased to see that what seems to be serving organizations right now in this environment with many that we talk to is that they pivoted quite some time ago toward a more team-based environment. We do see that as a really strong statistic, if you will, that shows up in our study across those top quartile firms. And so they've got systems and redundancies in place. They've also been leveraging these team structures to not only deliver a consistent client experience, but use those teams for career pathing and mentoring and delivering on an employee experience, which is really critical. I'll be honest with you, in a lot of the conversations with advisors these days, we hear, first of all, that many are still, in fact, hiring and even onboarding new employees in this environment. I don't know if Tom could speak to that on with their organization, but they do believe as well that there'll be a play for talent between now and the end of the year, that there will be an opportunity there. And so really making sure that your employee experience is well aligned, you've got a great compensation plan in place, one that rewards the behaviors that you're looking for, that creates role clarity. When we see those elements in play within benchmark with a certain firm, we know that they'll probably be in pretty good shape. And when you have stress testers like we've had these last few months, they seem to be faring pretty well.
Yeah, so I'm not sure you want to follow up on that, Tom. I think that is probably a very astute observation that the war for talent is not necessarily taking a break during this pandemic, right? That I think many firms, the smart ones, kind of as I mentioned in teeing this topic up, are looking to ride the wave that as we come out of this, right? So they're investing now. Is that something that you and the firm are looking at that as well?
It is. In 2018 into 19, we hired 3 or 4 positions that we would call opportunistic positions, as opposed to positions that, technical positions or operational positions. The difference that I see is an opportunistic hire is someone who we think will move the needle of the firm. They may not have the prerequisite skills at a particular position or position hire, but we're looking at these people as making a difference pretty quickly in the firm because of a different set of skills that they bring, or a different way of viewing things. And one of those opportunistic hires we made was a chief client experience officer. We wanted to make sure that the experience that our clients were having across our 5 locations was very similar, and that it was a high level of experience and service. So that person at that position has made a big difference already, just in making sure that we've harmonized the level of service that goes out and the feel, so that whether you're being serviced out of New York or out of Boston or Atlanta, you know that it's a Modera experience. And so we're looking at things like that, but that's just one example of an opportunistic hire that's made a difference that we think will play to our strengths coming out of this.
I love it. I love it. Okay, so now I'm going to kind of pivot just a tiny bit from strengths and weaknesses to everybody getting their nerd hat, if you will, on it's there's always that benchmark that you find yourself looking at, or that piece of data or piece of information that comes across your screen or your desk. You're like, you can't help but geek out on it. It's kind of like the equivalent of doing a YouTube deep dive. You watch one video, you're going to watch another video or whatever. When you start looking at these benchmark studies or the data that's presenting itself, is there anything that you look at and you're like, I just got to know more about that? Like, what's something that you're kind of fangirling or fanboying over, I guess, from a data perspective? How about you, Catherine?
Oh my goodness. So many.
You spend a lot of time with this, right? Yeah.
I know, we live in it all day long, and it's terrific. A couple things that come to mind, and they pertain to where businesses are spending dollars as a percentage of revenue. And you've heard me mention already this look that we take each year around what are top quartile, which are faster growing firms doing that might be different than slower growing firms. And I love when I get to talk to an advisor, and one of the first things when they're asking me about, hey, what are these faster growing firms doing? They immediately are assuming that they are spending as a percentage of revenue more on business development, more on technology than the slower growing firms. And in fact, for several years now in our study, that's not actually been the case. The,
Really?
the spend of revenue as a percentage of revenue when it comes to business development and technology, and this does not include human capital applied to those endeavors. So this is strictly, on the technology side, it's about the software, the programs, and on the biz dev side, it might be events or what you're doing in your digital marketing. It's actually sat right around that 3 to 4% across all firms in our study for the last few years. Now, that said, and this is where we really geek out, how they spend those dollars is definitely different. So for those top quartile firms, they're investing in forward thinking technology and spending time and getting those workflows in place as automated as they can, absolutely leveraging technology almost as another employee, if you will, in a way that streamlines their client onboarding, the client experience, the day-to-day running. And then, much as we've been talking about here, the analytics, really understanding. I mean, you heard Tom talk about as they look at and measure the business, and all the way out to how they pay dollars out to their team, leveraging technology wherever possible to help with that. Those are some of the behaviors that we see, even if they're not necessarily spending. And then the last piece is related as well. You would also assume that these faster growing firms have a higher operating profit, if you will. And in fact, that's not the case. And so their operating profit tends to come in around 20-21% versus maybe 28-29 for our slower growing firms. And they're okay with that right now because they're reinvesting in the business. They might be in the midst of some M&A activity. They're making investments around technology, people, and they're confident that that will pay off over time. So they're willing to sort of, that idea of growth that comes at a cost. So when we see those numbers and as we said, assumptions of many advisors that come to the table and assume they must suddenly start spending a ton of money on technology or business development, you want to spend money. If you're not spending any money at all, that's a whole different conversation. But as a percentage of revenue, we actually see that fairly consistent across the studies.
I think that's a really astute observation. I guess that's the second time I've used astute, so I'll bookmark that. I won't use that again. I think it's a really smart observation, right? That it's not how much you spend on technology, it's how you use the technology, right? So it's like any tool in your toolbox. We all have them, but the people or in the firms that are using them smartly to produce results and kind of analyzing what it is that they're using the tool for. Particularly in this day and age, I think it's really important to keep an eye on using technology to help you scale your efforts, right? To help you bring more prospects and help you kind of qualify those prospects as potential clients, to help you service your clients with more ease and speed and in the ways that they want to be serviced, right? Many clients now want to be serviced digitally. That's really interesting. Terry, as somebody who's leading a company that's making a benchmarking scorecard for individual advisors and the enterprise and the like, and constantly thinking about how to measure things and how that measurement may roll up to the overall valuation of a business and so forth. Are there any particular benchmarks or KPIs in there that you just can't stop looking at?
So instead of, I prefer to answer the question not specific, benchmarks, although I could probably name a couple, um, but it's the experience. And I think what we envision, and I have envisioned for a while, is changing the way that people consume the benchmarks and the data that is out there. Because today it's about a year-long process, and this is nothing against DFA has dimension. I don't know if Catherine, you like Dimensional or DFA, but Dimensional has been doing this for 10 years and providing an incredible value to the firms that are part of that because that's who they're serving, right? And other firms do it primarily as a value add. And then you have some other studies where you get some of the output, and it's typically it takes almost a year to get all the feedback and compile it and get the insights and publish it. And it publishes in a very comprehensive, thick book or booklet or white paper that has incredible insights, but it is dated, it is old school, and it is not all of the things that we've really been talking about. How about one that is real time, that's updated with the things that can be updated on a much, much more frequent basis? Um, so it's not just a single point in time. And I think that's what I would like to see this industry move towards, because, if you think about, I'll use a sports analogy. If you look at whatever sport you're talking about, baseball, they're not looking at last year's statistics. They're looking at yesterday's statistics or last inning statistics. And in our industry, we're looking at not, I mean, we're looking at last year's statistics. And then even further, we're looking at the entire league as opposed to that team or the team in the National League or my division or my. So I think we want to take benchmarking to a level that is much more easily consumed by the people that want to consume it, so it can impact their business and allow people like, Catherine and the others to leverage their core people to help deliver and on what it means and how it can be implemented for them and the best practices, et cetera. So I probably skipped around your question, but I think that's part of what is missing in this industry today.
I think you actually kind of leaned into what Catherine was saying about the use of technology, right? Of like we now have better technology at our fingertips and investing in it appropriately. So this is an example with Truelytics where, uh, if used appropriately, the benchmarking, if you will, becomes much more attuned for taking action, right, on the firm's behalf, because it's not just looking at, hey, here's some industry stuff that you should use and you should really take seriously. It's like, hey, great, here's the industry stuff, and also here's your stuff.
Well, Catherine's point, which is interesting, because technology is critical. But a lot of people mistake the spend on technology versus what it does for you. And as a matter of fact, one of the studies we did with firms looking at predictive analytics, one of the biggest attributes of losing firms that weren't growing fast and didn't have a lot of assets, was the percentage of revenue that they spent on technology. The more they spent on technology as a percent of revenue, the worse off they were. Now, some of the reason is obviously because they were spending so they would get a future benefit, clearly. But there's also a big part of that is that they're spending stuff on the wrong technology. They're building it themselves, and instead of leveraging, other people who have done it. Um, so I think there's a lot of stuff that you can look at, and that's what's going to help firms, make better decisions moving forward.
And I would add one of not just in in our study in terms of the data we collect, but just in our engagement with advisors, the opportunity to have technology make such an impact on your organization is greater than it's ever been before, and not just in terms of the fact that there is more technology out there to choose from. I will date myself by saying I remember when there was pretty much just one portfolio management system out there available, and I won't name it by any stretch of the imagination. But there is a lot. There's just so much more out there that can allow a firm and really meet across the scale, whether you're talking CRM, analytics, portfolio management. If you're a $200 million firm or a 5, 6, 10 billion dollar firm, there's technology in play there, and I think that that's a really powerful opportunity in our industry, and it's exciting to see advisors sort of wrapping their arms around that.
I agree. So, Tom, I don't want to overlook you. I want to swing back here. Is there kind of your the specific benchmark data point or category that you find yourself compulsively nerding out on? Maybe.
I'm going to answer this in two ways. First, I'm going to give you a specific data point, and then I'm going to talk more thematically. The specific data point, if you've heard of Occam's razor, it says that sometimes the simplest answer is usually the best. Well, for me,
Oh yeah.
sometimes it's the simplest metric is usually the most profound, and that's revenue per employee. For me, that was probably the first and continues to be one of the more important metrics that I keep so I can track how we're doing productivity wise or efficiency wise, and how we're doing at our different locations, and when it's time to add an advisor or some support to a team or a location. So I love revenue per employee. I think that it's done an awful lot for our firm. So I do get a little excited about it. I know it is geeky, but I do run the business based on metrics, so these things are important to me. The other more thematic is this: the two other people on the phone represent companies, DFA and Trulytics, that have had a tremendous impact on the growth of our firm at Modera, and I'm very thankful for what they do for the industry. The data that comes out of the DFA studies is excellent. But thematically, the problem that I have, and I think that Trulytics is trying to solve, and I think Terry hit on it, is that when we participate in a Schwab study or a Fidelity study, or in the past it was Moss Adams and or Investment News and DFA, the definitions are not the same. The way in which they interpret the data is not consistent. And lacking that consistency across these different benchmarking surveys makes it very difficult to compare how you're doing in one set of data versus another set of data. And I hope what Terry's trying to build is that dashboard for advisors where they'll put some I guess the right word is a systematic approach to analyzing that data and consuming it so that you can make more informed decisions. And and if we can get a more consistent way of defining some of these things, when we put the data in, we know that the data coming out on the other side will be more relevant for when we try to apply it to our businesses.
Yeah, that's a great point. And Tom, I think you know, I may have invited you to this a couple years ago. We tried to do and are doing just that. Specifically, as an example, every firm has a different chart of accounts. There's thousands of different charts of accounts on your on your expenses. And if I call something sales and somebody else calls it marketing expense or whatever, it's hard to measure. So having that consistency, and then same thing with employees, right? Tom is the CEO, but he also does, some selling and going out. Well, making sure that we're capturing all that so we do have apples to apples. And I have said for a long time, and I know that this is very self-serving for Trulytics, but I don't understand why there isn't an industry utility around benchmarking, because all of the firms that are doing it spend millions of dollars a year to do it, and it's only usable in a way for either the people that are doing it, or they have to do what Tom does, and that's trying to back into it because there is inconsistencies. The 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 um, insights that firms can use for their clients is still going to be there. But and part how we got there is because we were collecting 100 and some odd pieces of data to do the KPIs and evaluations. That just allowed us to look at this huge opportunity for benchmarking. When I bought the IP, there was 330 firms on the platform. Today we have over 7,600, which is without a doubt the largest database for these types of surveys. Why wouldn't we leverage it and have consistency and have technology and have it real time? And I think everybody in the industry wins.
Terry, I think you just teed up the best segue ever into the kind of the last general topic area I wanted to cover, and that's what's next. Let's talk about the future of benchmarking for the industry, and so maybe you can kind of continue on the theme you were talking about. Right now we have some incredibly insightful data at our fingertips for RIAs and advisors, better than we had a decade ago. But as you're talking about. The future becomes a lot more action oriented. It becomes a lot more uniform. And I know one of the things you've talked about a great deal is, Trulytics having some standard metrics for the industry. So maybe you could talk a little bit more in detail about what you're working on and what your thoughts are for the future.
Yeah. So obviously the future would be having it in the palm of your hand. That's updated on a very frequent basis, whether it needs to be daily or hourly. I mean, clearly some of this stuff doesn't need to be as frequent as your client information, but having it done that way. And the most important thing, I think, is that it needs to get away from being self-reported. Everybody, no matter who you are, if you do this, has self-reported data. Some of it you need to because it is, that type of data. But this industry, I mean, we know so much. There's no reason why the P&Ls should be self-reported, right? There should be an API connectivity to QuickBooks. There's no reason why client AUM data should be self-reported, and getting it from one custodian to another custodian. I mean, I've heard people who do a XYZ survey won't be as accurate as they could be because they don't want them to know that they have money at another custodian. So now we get underreported data. I mean, that's just the nature of the beast. That's insane for an industry that is technology savvy as we are. Um, you know, so I think that's the future of it, and I think it's going to take a couple of industry leaders to get together and almost force it, because people like Tom say this is what we want.
So, how about yourself, Catherine, and you and the DFA team? Obviously, you've learned a lot over the last decade or so in doing this, and I know there's been some collaboration between you and the team and Terry. What are some of the things you're working on to push things into the future?
Yeah, it actually highly correlates to what Tom and Terry have been talking about. We're absolutely thinking about how can we make the study, the benchmark process more real time, if you will, and more nimble in its gathering and then subsequently analysis to the advisors. So how do we do that? Right now we do an annual study. The window opens, we capture the information, and then the window closes. And so we certainly would love to get much more nimble around that. And case in point, we're in a really unique environment right now. Our study launches, we're looking for at 2019 data. I can't, I'll speak for a few advisors. They might feel like, well, you know what, 2019 sailed. I'm up to my ears in 2020, and I want to really know what other firms are doing and how I look and what I might do in the latter part of this year. So we're actually looking at a process during the summer here to gather some of that information to get more real time, if you will. But that's just sort of the tip of the iceberg. I do think that we also are keenly interested in helping advisors understand what their clients are thinking and feeling and getting feedback from them. And we have, through our end of client survey, are able to help advisors do that. And we love, speaking of geeking out a little bit more, we love when we can put an advisor benchmark results alongside their investor or their end client survey results and see, oftentimes advisors have a perception about how they're delivering their service, what's of most value to their clients, how often do clients even want to be communicated with? And then we ask their clients and we might see something just a little bit different. So it's that relationship to just continue to help those advisors feel informed and have great at their fingertip information about their clients is something that we're also thinking about as well.
That's great. So, Tom, I would imagine, and you kind of hinted at this, that there are some things that you feel they don't 100% fit into the puzzle of your individual firm that you're in and what you're trying to do. What are some of the things that you find yourself working on internally that you wish was happening at the industry level?
I have a couple of guys at the shop that help me with a lot of the data that we use for the surveys and for our own internal benchmarking. What we've had to do, since we do participate in a number of the studies, is we've had to create our own definitions that line up the differences in the surveys so that we can get relevant data across them. If I can make that go away, that would be fantastic. Keeping that data is kind of useless. It's only helping me because there is a lack of standards and definitions within the industry. An example I can give you of how helpful this has been. Probably about 20 years ago, I was a member of a study group of DFA firms that use the DFA philosophy in their investment management. And one of the things we did early on was we harmonized our P&Ls so that we can share that data and it would be relevant, so that we're all looking at the same type of data and categorizing it in the same way so that we could spot the weaknesses and strengths within our businesses. That was tremendously helpful. And that was 20 years ago. If we had the ability to do that now, whether it's a data download out of QuickBooks or out of your performance reporting system or whatever it may be, that would be tremendous, because not only would it save us time in the data input, but it would save us time in the data reconciliation, which is just, it's key that this data is reconciled so that we have good data. Otherwise, garbage in, garbage out.
It's fascinating to kind of hear some of these simple kind of roadblocks that are in our way to getting the kind of the best metrics for our businesses today. Uh, Let me ask you kind of like our parting question before we wrap things up here is, what is your dream benchmark, right? If I gave you the magic wand and said, you know what, Catherine, you can wave this magic wand and you're going to have this one little piece of this data set or this benchmark that you can now take and make the world a better place, what would that be?
Well, first, we would like to be the world's largest benchmark study. I mean, that's
There you go.
we'll put that out there, and continue to grow in a global nature. I think we've touched on it. It really is an ideal environment. A dream benchmark is one that is easily accessible for the advisors, that the not only the gathering of the data but the immediate output, so that, to Tom's point, I mean, I think about the pace that Modera operates at. We need to come alongside that and have information that's meaningful, actionable at that same pace that we know advisory firms are working at. And so for me, that just having that fluidity and pace of executing would make for a dream benchmark. I'll stop there. I could probably go on for several more options, but I'll leave a few for Terry and Tom to talk about
That's right. So, how about yourself, Tom? I'm sure there's that you occasionally looking at things and you're like, man, if I knew this, give me that magic wand, I'll make it happen. What's that dream benchmark for you?
It would be standardized real-time data, so that we can make more informed decisions quickly, so that we can pivot when we need to. I think Catherine said before that they're analyzing the 2019 data and they'll be releasing it to participants. And by now, that data is incredibly old. Back in December, when we were doing our strategic planning for 2020, I was telling my ownership group, hey, if the markets move sideways, if they do nothing this year, we're going to have one of our best growth years in a long time, because of the things that we had done in 2018 and 2019 to prep for 2020. And within 20 days, from mid-February to mid-March, that all blew up completely because of 20, 30 days in the markets. And if I had real-time data that was where the definitions were standardized, we could pivot much quicker.
Smart. And Terry, so I know you're working on this like constantly. Are there some things where you're like, oh man, I wish we could make this happen quickly and present this to the industry?
Well, I think clearly from a big picture, it is what we've been talking about. It's having standardized inputs and that real time. I think we can get there very quickly for specific metrics, right? There are certain things like revenue, like expenses that you're capturing on a monthly basis, headcount, number of clients, things like that are easily uploaded from different places that we could give dashboards that would be real time. That's easy. The stuff that really brings the insights that Catherine, and her team work on are, some of the softer things around, the questions that you have to ask around, engagement with clients, et cetera. And those can be supplements on a quarterly or semi-annual basis that go in. But the stuff that Tom is really wanting to run his business on are more of those hard things. So I think we absolutely can get there, should get there. My dream benchmark, specific benchmark, is that the industry would recognize the TrueLytics score as the penultimate benchmark, because it is a combination of all of those things that the business does that leads to a overall GPA on a 4.0 scale. That if you're a 3.6 score, everybody knows it, or everybody knows what that means. That's a firm that is good, it's growing, it's big, it's going to be around. And if you're in the 2.5 handle, that you have some work to do. And that may be great if you're acquiring and you can get them on at a good price, or you can, there's tremendous opportunity to improve. But I think my goal would be to have the Truelytics score as that. Hey, what is it? And everybody knows it, and the industry can rely on it.
And Terry, when I think about, particularly in the area of the number of firms in our industry that really do need to perhaps think about M&A or a path around that to solve for succession, to grow to the next level that they want to get to, having a better sense of who they might look to and where that opportunity might show up, because they know that firm is doing well with their growth and their technology and their operations, their leadership, the organization structure. That certainly, hopefully, would help move the marker on that.
Yeah, and as you know, Catherine, that is something that we are very quickly going to be releasing, is a private marketplace for firms so they can identify the best suitors. There's really nothing in the market other than very capable, highly qualified, excellent investment bankers that do it. But there's a lot of firms out there. Tom, I know that you guys use it when you're looking at prospective firms, and going through the Truelytics 25-minute, 30-minute evaluation in True Performance. It can align very quickly. And our goal is, because there's so much there, whether it's a fit, you can know right away. It might be geographically a good fit, but investment management philosophy, they don't focus on financial planning or holistic planning. All of a sudden, that's no longer a good fit. And finding that out early in the process is certainly going to be better than later in the process. And I could mention a dozen different things that would be alongside that.
Yeah, absolutely.
That's amazing, guys. Thank you. I want to wrap it up here because I know we're approaching the hour mark, but I really do appreciate each of you carving time out of your day. Before we let you go, let's make sure that, I'm sure people are going to want to follow up with some questions, maybe even get some more information about your respective firms. What's the best way for people to follow up with you? We'll start with you, Catherine. What's the best way for people to get in touch with you if they're really interested in learning a bit more about DFA and the benchmarking study?
Well, if they're interested in learning more about Dimensional and across the board, and certainly what we do in the area of practice management, dimensional.com and our Perspectives blog is, I think, a really great couple of great places to go. You can find me on LinkedIn, and happy to definitely reach out and happy to correspond and see, kind of go from there.
And you, Tom?
Best way to reach me is our website or my email, which is tomo@moderawealth.com. Again, we're big proponents of benchmarking, so any questions, I'm happy to answer how we've used it.
Fantastic. Thank you. And Terry?
Terry at Truelytics.com. You can go to our website, Truelytics.com, and or LinkedIn, and would love to talk to anybody.
Great. We'll make sure that all that contact information gets linked up on the show notes for anybody who's interested as well. So when we publish this podcast and you're listening to it, you'll be able to just go to the Truelytics website and go ahead and click on all of that respective information. Well, once again, everybody, thank you so much for joining us today. This was a really interesting conversation. I know I got a lot out of it, and I assume anyone who's listening to this episode got a lot out of it as well. Thank you, guys.
Thank you.
Thanks for having us.
Thanks very much.
All right. Huge thanks to Catherine, Tom, and Terry for joining me on this show today. I have to admit, it was a bit of a workout. I've never had to handle 3 guests on a show before. Although it was a lot of fun as well. I have to admit that as well. It's always a bit humbling, when you have 3 crazy smart people in a conversation and you're there to make sure the conversation goes smoothly. You just want to make sure you don't mess it up. I think we accomplished our goal with that today. I think everything went really well. I know I learned a lot, and I hope you did as well. As I mentioned at the top of the show, please feel free to send in your questions to podcast@truelytics.com or swing over to truelytics.com and click on that Modern Financial Advisor tab so you can find the show notes there, and you'll be able to connect with our guests individually if you want to. And while you're at it, if you're online, head on over to LinkedIn, Facebook, and Twitter. Give Truelytics a follow. It'll be great for you to stay on top of what we're doing here, the things we're sharing. I know you'll get a lot out of that as well. If you like this podcast, you're certainly going to like the social feed. Okay? Well, until next time, please, please, please make sure you stay safe. If you have to leave the house, make sure you wear your super cool superhero mask, right? We're all wearing masks now, at least for the foreseeable future. So make sure you're staying safe. And if you can, stay home. And while you're home, why don't you binge listen to a bunch of Modern Financial Advisor podcasts? They're entertaining. We've done a lot of them, right? There's a lot of good stuff out there. You're going to love them. So give them a listen, okay? Hope you have a wonderful week, and we'll see you next time on the Modern Financial Advisor podcast. See ya. Bye.